Hey guys, Boris Lossberg from BK. Great to be with you. Another good week of trades. As usual, my disclaimer to start off that everything I'm about to show you is for educational purposes only. No claim is made to accuracy or efficacy of any trading strategies contained in this video. And as always, practice, refine, and do your own homework. But here, another interesting trading idea for you this week, completely opposite of what we've been doing over the last several weeks, because I thought it'd be a kind of interesting idea to take a look at the opposite of trend, which is basically mean reversion. And we're going to take a look at the exact same setup that I generally have had on the trend side, which is a 15-minute chart. This is Euro Yen, my favorite risk currency cross. And one of the things you'll notice here, 20-period moving average, simple moving average, what you will notice is that price tends to magnetize itself around the moving average. It will come out, extend itself like a rubber band, then come back in. Come down, extend itself rubber band, and come back in. Even if it's trending up, there are cycles to which it always tends to move. Just like salmon moves to water, this moves towards this 20-period moving average over a period of time. So, having observed, of course, that mean reversion is obviously a very, very common characteristic of price action, let's take a look and consider one possible trading setup that I've been looking at, that I've been trading myself, that you guys might want to find interesting. Very, very simple idea. Basically, the first thing we look at is that the price must be extended away from the moving average by at least 50 points. So let's just take a look at it. I'm going to zoom in a little bit here so you guys can see this a little bit better. So we were looking at this particular setup, right? Here we are, Euro Yen. Moving average is somewhere like around here, around 1440. The price really goes all the way out to like 1540, all the way up to the 100 points away from the moving average. I use the exact same idea that I do on the upside as I do to the downside. In other words, what I'm looking for is a momentum sell. Just like we look to buy on momentum on the upside, here we're going to look to sell as it moves towards the moving average. So here we are. We're going to use the round numbers as our trigger point. We can sell this move. This ends up. The critical thing here is that the price candle must end up and stay up above the 15 level in order for me to even consider a signal. Then I look for the price to actually fall through the 15, and I'm a seller on 15 with a 25 stop, 25 target. This particular case, I think you're selling at 1500. I don't think you make the. No, you do. You actually do make the. This goes down all the way down to 1471, so 1475 is your target. You would have made target. Again, same concept. Price action moves away from the moving average by at least 50 points, and most importantly, not just simply moves away, but it closes above 50 points. And now we're above the 50 land again, 1500 again. I'm watching, push. It doesn't make it to 1550, so I'm going to be selling again 1500 here. I'm selling 1500 to the downside. And this is something that happens quite frequently, and you have to sort of accept the fact that you're going to be chopped in this setup because you're using a 25 stop, 25 target. So I sell through the 15, and what happens is you get a move to the downside, then a chop back up, and you very likely get stopped out. But the price moves right back down into the 15 handle. You sell again, and boom, you've made your money. So you have one profit, one loss, one profit. Is a very, very sort of a common parameter of how you do this, and that's why it's very, very interesting to trade it, because you have to have patience and you have to have sort of control. It's not a simple let's put together 5, 6, 7 winning trades in a row. It's basically trying to enter and win more than you can lose on an even money bet, which is essentially what you're doing. So on the flip side here, you can see that here we are to the downside, where price is going to just simply trickle down. And then eventually it's going to start moving back towards the moving average. This is Asia, so I generally am not going to trade Asia because price action is kind of very, very sloppy. But here we are back in North America here. So we come in, we extend ourselves all the way below the 1100 level. So here I'm a buyer at 1150, right? I'm a buyer at 1150 with a stop at 1125. So I get long here. Because remember, this ends up below 1150. Here you would get stopped out. Here, however, you make plus 25, right? Again, we turn around. I'm a buyer at 50, and here I think you survive the stop and you make another 25. So the point is that yes, chop is very much a part of the setup, but the overall balance is price tends to always magnetize towards the moving average. If you can catch it a momentum move towards it, you're essentially doing the flip side, the mean reversion side of the move that I showed you over the last several weeks, where you're buying the breakouts and hoping for a continuation on the first move out. Both ways, you're always going to get chopped. Both ways, you're always going to get some stop outs. But because it's an even money bet, what you're hoping for is just even a slight edge. Even a 55-45 or at best 60-40 edge is a positive edge, and hopefully that really makes the setup worthwhile. So this is Boris Schlossberg. I'm wishing you the best luck and the best of trading. Next week, more trades, more ideas, and I'm going to show you live trades off this setup that I'm going to be trading next week while I travel all across the country for my son's bar mitzvah. All right, guys, over and out. Have a great Memorial Day weekend.